Hi everyone, let's go through my main bullish and bearish macro and high time frame scenarios on Bitcoin. Starting with the first bearish one where we're looking for a 1, 2, 3, 4, 5 and now we have an A, B, C correction, so we would expect more downside in this particular scenario. Gotta say that this wave 4 however is very short in time compared to this wave 2 because usually a wave 4 is longer in time compared to a wave 2, but as you can clearly see that is not the case with this wave 4. However, one could move with a different count, this one to the right as well as this wave 2 to the right as well, and then it would fit, but that is something for another video. If we then look at the ABC, we're looking at a 5-3-5 wave move, and it is important to note that this wave 3 is at least not the shortest wave. So in an impulse, usually you like to see wave 3 extending to the 1.618, which sits here at about 14.4k, but as you can see, wave 3 ended above the 1.618 target, but a absolute minimum requirement in an impulse is that wave 3 in an impulse cannot be the shortest wave, and this is the one-to-one of this wave 1, so as you can see, wave 3 is longer than wave 1, which therefore makes it at least a valid scenario, and also wave 5 here is shorter than wave 3 as well. Now if we then look at this corrective structure in a wave B, we're then looking at a wave A, and I made it an A because this looks to be then a 5-wave structure, so 1, 2, 3, 4, 5, and we'll see that on the higher time frame I have different counts, different impulsive counts over here, but at least we're then looking for a wave A followed by a 3-wave in B and then another wave C to the upside, which would then finish wave B. The reason I would like wave A to finish somewhere over here, which also includes the famous level we've been talking about in many of the low time frame levels, the key level, the 32.4k level, which is the high of the range made over here in 2022. Interesting level for maybe the high of wave A, take liquidity, then down for B and then up. So that is a reason that I like wave A to end somewhere here. Another reason to have wave end over here is because this is a very important support resistance area on the macro time frame. It was a lot of support over the years, then turned into resistance, and now we're basically backtesting this resistance for the first time. Weekly order block here as well for a little bit of extra confluence. So yeah, this is an important area on the chart for then maybe a 3-wave down and then another 5-wave move up, where I think this area over here is massively important. As you can see, we not only have the golden pocket and the 786, which are for a wave B very interesting targets and also very common targets. However, the minimum target for a wave B is the 382 all the way down here, and then the 0.5 as well, and also even the 886. But these are just the most common ones that are hit in a wave B. And besides the golden pocket, which is always a big level, you also have the point of control of this whole range over here right at the level of the golden pocket 618 as well at 38.9k. So the point of control plus the golden pocket at the exact same level is massive confluence for then a potential short scenario here on the chart. Of course, stop loss somewhere safe and then trading it down for wave C, where then you eventually expect another 5-wave move to the downside for that wave C. Now this wave B, can it be finished already at wave A? Yes, you do see I have some fib times on my chart, and if we compare the time it took for wave A to form compared to what we currently have in this potential wave B, currently, this week is the exact week that we are on top of the 382 fib time taken from the all-time high to the low of this wave A. And for a wave B, the 382 fib time is a possibility. However, I think it is nicer if this is only A, then down for B, then eventually C to hit the point of control as well, and then go down once more for then this bigger wave C, where if we have a look at the target area of this wave C here at the lows, you can see that again, I pulled a range, but this is an even higher time frame volume profile range from all the way back 2018 to basically 2020. So a multi-year volume profile range where the value area high, which is the blue line here at the top, is sitting at 9.7k. Now, not only do we have the 9.7k level, we also again have a golden pocket level taken from the low to the all-time high, which sits right around that value area high level. So basically between 8.8k here and 10.3k for massive support. So that is a very important target that if this short is going to be activated, a very, very important target is going to be this level over here around 9 to 10k for potentially then the low of this wave C, and then an ABC where also the white box over here is currently the estimated most common target area for a wave C if this wave B is retracing close to, let's say, the 786 area, where you also have the value area high over here around the 786. So if this wave B is going to end somewhere here, the most common target area for this wave C is going to be between the 1 and the 1.236 from an Elliott Wave point of view, which then also encompasses the golden pocket and the value area high of this multi-year range. So yeah, that is just incredible support over here right about that level. If we then go to the second scenario, which I'm not sure if this is the preferred one, I might actually start to like this one based on all the confluences, but hey, we have another one over here, which then is a 1, 2, 3, 4, 5, but then to the downside, we're looking at a WXY. So a W is then a 3-wave structure over here, another 3-wave structure in this wave X, and then we're looking for another 3-wave structure down in wave Y, where a minimum target and also common one for wave Y is the 618, sitting at about 12.6K right now, and another common target is all the way down here between basically 7.5 and 5.5K, which I think is very, very low, because as just mentioned, we have a big point of control around 9K, so you have to lose that point of control to basically go to the lows over here. So at the moment, what I like most is having this support resistance flip over here, including the 618 target for a wave Y, and then maybe at about 9.7K the point of control as well, in case price does go a little bit deep. But going all the way down here, not so sure just yet. Then if we look at this wave X, a usually minimum target is hitting the 382 at about 29.6K was the 382, which we have hit, as you can see, for now at least a little bit of resistance to the downside. But then again, a target that I just really like is the 32.4K, the highs over here for a bit of liquidity. Of course, price does not have to hit this target and it doesn't need to go up to grab the liquidity, but it's just an interesting area that I think on the chart. So again, support resistance over here, potential short scenario where the stop loss is clearly above the 32.4K area in case we do grab the liquidity and then go to the downside. However, I'm not so sure yet if I like this scenario more compared to this scenario on the bearish time frame, because this one starts to look very nice indeed and might actually be my preferred compared to the WXY, even though the WXY does look nice as well, especially this move to the downside fits well. But okay, you know, this is macro time frame stuff. Things changes, like it takes a long time for things to change, and also the lower time frames is where eventually the longer scenarios are formed, right? It all starts on the lower time frames and then we can actually move to the upside, because in the end what happens on the low time frame will be translated in the higher time frames. So if you then go to the macro bullish scenario, which is actually the only bullish scenario that I have on the macro, we have then a wave 1, 2, 3, 4, and then a wave 5 to the upside with targets, main common target for wave 5 between 98K and 174K. And then this move to the downside is a wave 4 in a WXYXZ, which is quite a rare pattern, but in this scenario it works, where the low of this wave 4 was made on top of the 0.5, which is a maximum target for a wave 4. So this works. No candles were closed on the weekly time frame below this 0.5, so that's good. And we also made this low, the exact week low, on the 0.618 fib time, taken from the low of 2 to the high of 3. And we also had a little bit of a volume peak at the lows, which can signal a reversal area, just like it did for this wave 2 over here, which was the COVID dump. But in my opinion, this was not a COVID dump, this was a wave 2 from an Elliott Wave point perspective, right? A lot of panic, but as you can see, the weekly candle closed perfectly in the golden pocket area for then that massive move to the upside to eventually 69K. So in this particular scenario, in this wave 3, you can see that now the yellow wave 1, yellow wave 2 are positioned over here. Then we have 3, 4, and 5, and now 4 is actually longer compared to then wave 2, which works very nice indeed. And we have two trading setups over here. I do think the bearish scenarios might be still a bit preferred over the bullish one, and that's because of the volume that we're seeing at the moment on the lower time frames. But at least from a trading perspective, one could have entered over here, stop loss below, because in a wave 4 you don't want to see high time frame candles close below the 0.5. So that was basically the first one. The second one is entering on the retracements, like was possible over here, or if you get another retracement, you know, you just add during the retracements for then the longer high time frame targets. But again, I do think the lower time frames, which we'll go into now, the high time frame counts, which is one time frame lower, are very important to know what is eventually going to happen on the macro time frame, right? So if we then go to the daily time frame, my first high time frame scenario I'm showing to you, I like this one, and that also has to do with the volume and the move to the upside that we have. So unregarded. If like this can be a WXY on the high time frame, this can be the low over here of the bullish scenario, and then this is a wave 1, 2, 3, 4, 5 for more upside, or this can also still be the low over here of that big high time frame wave A, looking then for a 3 wave in a B and then a C to the downside. So it doesn't matter what this scenario is part of, we just zoom into the high time frame and look at this as a single structure, which then is a 5 wave diagonal to the upside. So in this scenario, what you want to see in a diagonal to the upside is preferably overlap between the price action of wave 1 and the price action of wave 4. So price needs to dip a little bit lower, get inside this white box to get overlap with this wave 1, preferably in a diagonal. It's also actually quite rare if it doesn't happen. And what you would like to see as well is a volume going down when the diagonal is forming. So the higher and the further the diagonal goes with the waves, the lower the volume becomes. And as you can see, currently the highest volume is then in this wave 1, which is a 5 wave structure, of course, with the highest volume in wave 3. Then we have this wave 2 over here, where we also have a high peak of volume, but lower than wave 1, which is what you want to see in a diagonal. Now, in this scenario, the wave 3 is a little bit of a weird duck lights, let's say, like it looks a bit weird as well, also from a count point of view. But I like that's something for the lower time frames, right? We'll get there in another video. But in this scenario, you can have some sort of a 1, 2, 3 range 4 and then another 5 to the upside, which also looks a bit weird. But wave 3 has to be here, because if you put wave 3 over here, right? So we would move the green 3 to the left. Then you have an expanded flat over here in a wave 4 scenario, potentially being a 3, 3, and then a 5 wave move to the downside. But that is not possible in a diagonal, or at least extremely rare. Most commonly, you want to see zigzags. So a zigzag in a 2 and a zigzag in a wave 4, which is a 5, 3, 5 wave move. So yeah, preferably seeing a zigzag in this structure. Counting a zigzag in wave 2 is not too easy as well, so that's something to at least take into account. But yeah, in this scenario, you're looking for a 3 wave structure zigzag in wave 4, where we have some nice support around this area between 24.3k and 25.3k, where we also have the 0.5 FIB, which is a common target for a wave 4 in a diagonal. And we have also my yellow target box over here. The yellow target box has a couple of confluences: daily naked point of control, the weekly naked point of control, dailies, and some other stuff. So yeah, it's definitely an area of interest for me for then the potential long setup over here, depending on how price is going down. Because again, we want to see 3 waves, right? Not just 5 waves straight, but preferably in this scenario, you want to see 3 waves, and then laddering the longs the second time around when you get that second wave, stop loss somewhere below, trading to the upside, where then the 2022 range highs is a very important target area for potentially that wave 5, because wave 1 needs to be longer than 3 and wave 3 needs to be longer than wave 5. So you're going to go shorter each time, where this target area, the range highs, is very interesting for that wave 5. So let's go to the second bullish scenario, which is a 1-2-1-2. Now, I'm not really in favor, as mentioned on the macro, of this scenario because of the volume. As the volume is going down while price is moving up, it doesn't look too bullish, right? You want to see, especially in a 1-2-1-2, preferably you want to eventually see price moving or volume moving to the upside. And I'm actually talking about a 1-2-1-2, but this is just a 1-2. Sorry about that. So actually, volume wise, this still works. Sorry for the confusion there. I thought for a second I had a 1-2-1-2 and then eventually a 3 to the upside. But of course, I don't have it because it is so unlikely for me. So in this scenario, excuse me, we have the low over here of the bull market or the bear market, and then we move up in a 5 wave structure, which then is a 1, 2, 3, 4, and then wave 5 ending over here inside the common wave 5 target area, the 1.236 and the 1.618, taken from the high of 3 to the low of this wave 4. Then we have a beginning correction for this wave 2. So I say beginning because for me, this expanding flat and then a 3 wave A, 3 wave B, and a 5 wave C is then only the beginning of a corrective structure in potentially this wave 2. Because after this 3 wave structure, this is then either an A or it is going to be a W, and then you eventually expect another corrective structure and then another corrective structure to eventually end this potential wave 2, where the most common target of wave 2 is between the 0.5 and the 0.786, but between these common targets. The golden pocket is by far the most common target, which also has nice confluence with the low of wave 4 over here for maybe a bit of a liquidity grab for then a continuation to the upside in a what should be very, very big wave 3 to the upside with a massive amount of volume as well. So this is a bit of the difference, right? In the other scenario, the diagonal, we want to see 3 waves to the downside, right? But in this scenario, the 1, 2, you want, in this scenario, if this is an expanding flat, you want to see a straight line going down, where the target area is quite similar because, again, we have that yellow target box over here, support resistance area. We also have a daily order block over here, so an interesting target area. So the target area is pretty much the same, but it depends on how price is getting here, which scenario is going to be more likely. Is this an ABC and we go straight down to hit the target area? Or are we coming down in 3 waves and is the diagonal more likely? So we have to wait and see. If we then look at my final scenario I'm showing in this video, we have the more bearish scenario where we are not or at least very unlikely taking the high of 32.4K over here of the range in 2022. Instead, wave X is already finished on the high time frame WXY count, and we are now moving to the downside. So in this particular scenario, we have then an expanding flat in wave X, right? Which then is an ABC, where this C is a 5-wave structure. But now, instead of the diagonal structure, where you then have a wave 1, 2, 3, 4, and then eventually a wave 5, the 5 waves are already finished. So in this scenario, you have wave 1, wave 2, then wave 3 has the highest amount of volume with then a 1, 2, 3, 4, 5-wave structure in wave 3, followed by a corrective structure in wave 4, either a zigzag or a WXY, doesn't matter, it bounced on the 0.5 perfectly, for then eventually a wave 5 to the upside, where the volume of wave 5 is lower than the volume of wave 3, which is exactly what you want to see in an impulsive structure. So in this particular scenario, wave 5 over here then ended in between the 1.236 and the 1.618 as a common target for this wave 5, for then a potential move to the downside. Now, if we look at the targets of a wave X, usually the minimum target for wave X is the 382, which if this is the high of 5, it did not hit the 382 with a high of 5 because the 382 is sitting at 29.7K, 29.6K, and the high of 5 is below that area because this then is the first corrective structure in a wave Y. Because a wave Y can be it can be complex, it can be a flat, it can be a zigzag, it can be anything, right? On the higher time frame as well, it can be very, very complex. So it can start with an expanding flat ABC, correction, further downside, then a move up, then a move down. It can be very complex, can be anything, but this could be the start of already wave Y. So, but not hitting the 382 is at least something I like to mention to you, just so you know. And also the white box that we are in at the moment is at least the most common target for a wave C and then an ABC expanding flat. So between this 1.618 and this 1.618 is the most common target area for a wave C. And as you can see, this wave 5 then ended inside the most common target area for a wave C and the most common target area for a wave 5, pulled from the high of 3 to the low of wave 4 to then finish wave 5, wave C, wave X, moving it to the downside. So in this scenario then, of course, the potential trading setup is entering somewhere over here. I think the stop loss, at least a bit of leeway still. Make sure that in this particular scenario, I would personally make sure that the stop loss is above the high at 32.4K, just in case price is going to go up, takes the liquidity and then go down. And then eventually see how far it goes, right? So in this particular scenario, we then expect it to go to the downside to levels of like 12K, 10K, whatever it is. That all depends on how price is going to move to the downside. So yeah, I hope this video was helpful or valuable to you. Please check out the most recent update I've done. And if you're interested, then next week, 7 p.m. Central East European time on Sunday, the next macro and high time frame is going to be online. So thanks for watching this one and subscribing, and I will see you at the next one. Bye bye.